Welcome back to the channel, everybody. Got a little interesting one for you here today. I've been asked a couple of times by a few people in the Edgeville Discord how I trade the IB, how I use the reports to come up with my trade plan. Um, and so I'm making this video for those folks so we can go through everything. And I've been showing some pretty consistent results here lately, which I think is why people are a little interested. Um, so let's get to it. Um, in this video, what I'm going to do from the beginning is I'm going to show you my profits on my Ignite funded accounts, and then I'll move into the Edgeful report and show you the information that I use from it, and then we'll move to the charts. And what I'm going to do is I'm going to back test the entire month of November. Now, this is manual back testing. This isn't throwing something in as a strategy and letting the computer run it. I'm actually going back day by day through November. Now, I will show you the first day's back test. Then I'm going to pause the video and I'll run through the entire month of November. And at the end, I'll show you the P&L from that and a very, very important piece of information um, for everyone because everyone's not going to trade the way I do. So I just want to clarify a couple of things at the end um, so that everyone watching can tailor this to themselves. Okay. Um, so let's just get to it and let's head over to the top one accounts. Um, I have uh, three 50K Ignite instant funded accounts that I've been trading. Um, and I copy trade them all together. So every one of them looks the same. Um, 5,209, $52,937. Now you'll find that number very interesting if it clicked in your brain that I am only $63 away from payout. And I want to ask a question here, and I want you to be really, really honest with yourself um, because it makes a huge difference. If you were $67 away from payout, would you have quit trading at 9:37 in the morning? Yeah. Most people would say, no, I'm going to go ahead and get that other $63 so I can get my payout. And that's the problem most of the time. This isn't about the money. This is about following a process. Okay. The money is a byproduct. If I've been able to show consistent profits of 125 to $400 a day, um, do you think I'm worried about not getting that $63 to make my payouts? No, I'm not worried about it. It'll come. It might not come till after the first of the year. It's a holiday week. I didn't expect to get a trade today, but I did. Um, so, you know, you gotta you gotta get away from the money part of it, and you just have to trade the process. That's the only thing you think about. The money doesn't matter. Yes, do I have money targets for the day? Yes, because I have consistency rules I have to follow. I can't make any more money. I could have made a lot more money this month if I didn't have to follow the consistency rule. Okay. Um, but it is what it is. So I follow the process, not only my trade process, but I have to stick within the rules of the prop firm I'm trading with. Okay. So we're running a 66% win rate, which is pretty good. Pretty good. A little higher than my average. Um, but, that comes with patience, waiting for the right setups, and executing when those setups come. So let's run down to the weekly summary just real quick. This is the month of December. Um, as you can see, I had a losing week. That entire losing week, I only lost $124. Risk management. It's the key to winning the game. Okay, is controlling your losses. It's not about getting big wins. It's about controlling your losses. Okay. And then every week after that's been profitable. And this week's not finished, and it'll show up on January's calendar. Um, so, you know, leave it there. Yes, I'm at 929 trades, but I've had these accounts since the second week in November. So, $3,000, 2 months. You know, you can't rush it. You cannot rush this. Okay. You make your profits based on the account size you have, which for us 50K traders is $2,000. Okay. Just the way it is. All right. Until you start making profits and can scale it up and start building the account and start trading more contracts after you build the account up and start scaling up. Then you can start looking at making $1,000 a day instead of 300. You know, just you have to work it slow. Okay, it's a process. Let's work the process and be profitable. All right. So just wanted to show you the accounts real quick. So let's just jump over now to the chart, and I've got it in replay mode, and I am on November 3rd, which is the first trading day in November, and we're sitting at 10:30 in the morning at the close of this candle. So our initial balance just got set. Okay. There's a couple of things I'm looking for here. Now, I don't know if we're just going to continue down. It's been a pretty strong move. At some point, yes, I would expect a pullback. Oh, wait, we didn't go through the Edgefield reports, did we? Let's go back for a second. All right, Edgefield reports really fast, okay? I'm trading a range, okay? So there's certain things I'm looking for in a range, and there's certain tools that I use to give me the confluence with the report numbers that I trade, okay? And if after watching this video, you have any questions about the other things that I use in my trading to use as confluence, then by all means, leave me a comment below and I'll get back to you. And we can talk about it. Um, now, remember, I said there's things I use as confluence to the edgeful trade or edgeful numbers. Okay. That's going to be different for everybody. Some people use, I use fair value gaps, I use pivot points, I use dealing range theory from ICT, and I use the 9 EMA. Okay. Um, some people may use Bollinger Bands, moving averages, RSI, whatever you typically use on your charts as confluence, continue to do so. Okay. In a way that fits with the Edgeful reports, right? Okay. So real quick, we're going to look at the standard report, and this is why I choose YM. I just like YM better. You're going to find the numbers similar, looking at ES and NQ, but over the last 6 months, 74% of the time, we have only broken one side of the IB. That's above 65%, so this is a strategy I want to trade. It has become my number one trade, okay? So I'm dealing with a range. So you can go through and look at all these sub reports that you want, but there's only two that I want to look at. One is performance. How does this perform? Well, when we break out, okay, one side or the other, this is the max extension that you can expect to either the upside or the downside, right? And if this is the average, okay, the average is what I want to use. I don't want to be looking for the max extension every time. I'm never gonna make my target profit. I want to be looking for the average extension, okay? And that's going to be one of my main target profits. There will be other places where I'll take profit, um, and we'll take a look at that, okay? And then, since it is a range, once we break the range, um, do we pull back? How often do we pull back and how far? Well, only 44% of the time on breakouts to the upside do we pull back to the 25%. Okay. Um, and 21% of the time back to the 50%. So less than 50% we pull back to the 25% level. But 44% of the time we do. So what do I do with that? Do I just take the breakout and hope we don't pull back and I get stopped out? Or do I take the breakout accepting the first stop loss, looking for a second trade on the pullback to the 25? Well, I would I would rather wait for the pullback and miss the trade if it breaks out and keeps running. The reason being is that I'm mainly trade YM, but I'm also looking at NQ. I'm also looking at gold. Okay. Sometimes I'll look at oil, and I know my stat numbers on those. I know what those need to do on either direction on a breakout of initial balance for me to take a trade. Okay. So if YM breaks out to the upside but doesn't pull back to the 25%, maybe ES does, maybe NQ does, maybe gold does. Okay. And I can take a trade on one of those instead. All right. So that's basically the way I look at it. I would rather not take that first loss and miss the trade on YM, but be able to take the trade on NQ or ES because it did pull back to the 25 or 50%, whichever the numbers bear out on those reports. Okay. So if we break down to the downside, 66% of the time we pull back to the 25, and almost 50% of the time we pull all the way back to the 50%. So now I'm looking for a pullback to the 50% on a break down on YM. Okay. If we break the initial balance low, I'm looking for the 50% pullback. Now, I may, because it's a 50-50 shot, but more than likely, I'm definitely not going to trade until we get a pullback to the 25%. I don't care if I miss a trade that doesn't pull back to there, because 66% of the time there will be a pullback. Okay. I would rather have a no trade day than be taking trades in the wrong spots. Okay. I don't need to make money every day. If you looked at my calendar, you would see, if you noticed, there are no trade days on my weekdays in my calendar. Okay. Um, so that's the way I'm going to use this. All right. So let's head on over to the charts, and you will see that I have the initial balance indicator put up. I have the New York market sessions indicator. We'll just pop them down here so you can see everything. The initial balance breakout, the pivot points, the fair value gaps, the previous day's range, okay, by session, the opening candle continuation, market sessions, my EMA, and I have these delta volume bubbles, but you're not going to see those because you'll only see those in recent price action. They don't go this far back, and they won't replay this far back. So, um, all right. So we just came to 10:30. I'm going to show you this first day's trade, and then I'm going to pause the video, and I'll come back after I finish the month of November and give you the P&Ls and my insights on how every system can work with this trade setup. Okay. So, all right. I'm just going to click through this one candle at a time. Now, we just broke the IB low. Now, when we break below, remember we're looking for the pullback to the 50%. Okay. And that's what we're waiting for. If we see the 25% hold and really push back down, then I can go ahead and jump into a short because we may not, it's a 50-50 chance of getting back to the 50%. So how would I do that? Well, for me, right away, I'm seeing these 2-minute fair value gaps. If you don't know what a fair value gap is, YouTube it. There's plenty of information out there on them. And then come back and look at this video again. and you'll understand what I'm talking about. Okay. But these 2-minute fair value gaps, we're starting to invert these. They're not holding price down. Okay. We have these fair value gaps, these red boxes are fair value gaps, but they're not on the 2-minute chart. These are 15-minute fair value gaps. If you go into your fair value gap indicator uh, settings, you can choose the time frame that you want to see fair value gaps on. Okay. So I want the higher time frame fair value gaps. Okay. So, you know, this is right around the midline of that fair value gap, and that's an important area. If you don't know about fair value gaps, go learn them. If you want to use them, I do, and they work very well for me. So I might expect this to hold. At the same time, our 9 EMA has now just fish hooked. Okay. We've got a sharp turn on the 9 EMA here. Okay. So I have to be watching all of this. Okay. Now that we've started our pullback, I told you in the beginning that I use dealing range theory. Okay. So I have a fib set up for dealing range, and I'm going to pull that up. And all I do is take that fib from the swing high to the swing low. Okay. And what this gives me is 25% levels, just like the initial balance does. But since we broke the initial balance low, my dealing range is a little bit bigger than the initial balance. Okay. So I need to see these levels as well. And what I'm looking for here on such a hard push down right at the open, I'd love to take a golden pocket trade here. Why? Okay. Golden pocket, if you don't know what it is, again, YouTube it, go learn something new and see if you want to incorporate it into your trading. I love these trades, okay? Especially off of a forceful push off the open. When we start to pull back, I really want price to come back up in here. Now, why would I take a trade here? Well, this is the 50% of the initial balance, okay? 46% of the time we pull back to the 50% level, okay? So if we do break above the 25%, this is where I want to be taking a trade at. So let's see what the 25% level does. Okay, we've broken above it. Now we haven't gotten above previous sessions low yet. We could come up to here in reverse and not make the 50%. We could come up to this pivot point in reverse, not making the 50%. But now that we've broken through the 25, if we're going to make it to the 50%, we also have a swing high over here, right at the bottom of this 15-minute fair value gap. And the 6.2, my dealing range is right here at the midline of this 15-minute fair value gap. Okay. So what I'm going to do at this point is I'm going to go ahead and I'm going to set a sell order at this swing high at the bottom of this fair value gap, because my stop loss will cover. I use a 50-point stop loss on 5 micros. That's $125 loss. Okay, it might be 150. I'm not sure. So I'm just going to measure this fair value gap, and it's 49 points. Okay, so my 50-point stop loss will cover that fair value gap. Okay, so I'm okay with placing my limit order at the bottom of this fair value gap. Okay, because we've broken through the 25. Now, if we don't make it up there and it reverses, and I have some, my volume delta bubbles would be able to help me here, but I don't have them, so we're just going to run without them. Okay, so this is the trade I want to take, or another trade if it sets up for us. Now, I'm not real happy about the fact that we just made a bullish 15-minute fair value gap off of this V reversal here. This may be very difficult to get back through. Okay, so let's just see where we go from here. Okay, we're tagged into the trade. So I'm going to move my stop loss to the top of that fair value gap, and I risk $125. That's 5 micros, 50-point stop loss, and I'm looking for a $250 win. Now, I will put my win at 300 just because I would like to get to 300, and that's right around the midpoint of this fair value gap as well. Okay, so I'm going to leave it there and see if we can make it. Okay, but I will be happy if we run into resistance to close the trade in profit any other time. Okay, now two things can happen with this 6.2 and 7.0. We could pull down, we could go back up to the 7.0, which would stop me out. Okay, or we could reverse from the 6.2 and go down and take out the low, or we can just start consolidating a bit. Okay, because we're at the 50% level of the first range we're looking at, the first hour, right? And any 50% level that you're looking at, you can see it happened before we even made the low. You get consolidation, consolidation, okay, at the 50% level, all right? So it just happens. Don't ask me. It just happens, all right? So let's just go ahead and start running this forward and see where we get, okay? We've got to be mindful of time. Some of these trades can take a while. Some of them can come back in right away. Okay, we're at 1:30 in the afternoon, 2 o'clock. Now, I'm not moving my stop losses. I'm not moving my take profits. This is a win or lose trade, okay? And I will let it run till the end of the day and close the trade if I have to towards the end of the day. Usually right before 4 o'clock. I don't like trading after 3:30, but I will, if I'm already in a trade, I'll let it run. Once we start getting close to 4 o'clock, I'm ready to just cut it. Okay. So we're 3:15, 3:30. Now I'm really starting to look at this trade, and oh, hello. All right. So on our 350 candle, we came down and hit target. Okay. And we got into that trade at 11:30. 4 hours. We sat there and held this trade through all of that BS. How many of you would have the patience to just sit there and let that thing run like that all day long? Okay. It's either win or lose. The only thing I'm going to do is close this trade before the end of the market, before the close of the market at the end of the day. If it loses, we're done. We're looking for another trade. If it wins, we're done. We've made our profit for the day. I can only lose 2 trades a day. That's $250. Okay, which is another reason why I look for $300 in profit, because I want to be able to make just a little bit more than my max daily loss. Okay, risk management and risk to reward followed correctly will keep you in the game. All right. So that's day one. Now I'm going to go ahead and pause the video here, and I'm just going to run through all of my other trading. Okay. So just a quick explanation with the numbers from Edgeful. I know that when we break to the downside, we have a 66% chance of getting back to the 25%, and we have a 46, almost 47% chance of going back to the 50%. Okay. So when we break the IB low and I see the pullback starting to happen, I can put up a dealing range, which is my confluence. I can look at my fair value gaps, which is my confluence. Okay. I can look at pivot points, and I can use the 9 EMA as well. Okay. So those are the things that I use, and I saw a really good level above the 50%, where market can come and sweep some liquidity from this swing high into a 15-minute fair value gap where the midline lined up, and you can see where price stopped just below the midline there, just below the 6.2. Okay, this is good confluence for me to take that short, because once we break one side, 75% of the time, we do not go back up and break the other side. Only 1 out of 4 trades is going to go back up and break that other. 1 of 4 days is going to go back up and break that other side. Okay, so the numbers are in my favor. I can take the first loss there, lose 125, and then from there on, either say, okay, you know, if we lost the first trade and this is what was happening all day on a 2-minute chart, I would just basically say, you know what, the market's not doing anything. I don't care to trade anymore. And by lunchtime, I would have been like, no, I mean, we got nothing but consolidation up here. We're between a 15-minute bullish and a 15-minute bearish. We're not breaking out. I'd be done for the day at $125 loss. No reason for me to take that second trade and lose another $125, right? So, all right, I'm going to pause the video here. Where are we at? Okay, 26 minutes. I might be able to keep this under 45 minutes. So I will see everyone at the end of the back test, and we'll go over the numbers and a couple of other little things as well. Okay. So I'll see you in what will, for you, will be about half a second. Okay. Well, we have finished up the back testing, and all I have to say is, can I please have November back? Oh goodness. I will say before I show you the stuff, um, what you see on the screen here is volume, delta volume bubbles. It just shows high delta, buy or sell delta per candle, um, and it has to get over a certain amount before the bubbles will even show up. And the smaller, lighter bubbles are heavy delta, but then you get super heavy delta in these big dark colored bubbles. Um, so I went through, and again, let me just, explain a little bit here. Um, and show you, like here, right? This was a day where we had a bunch of, at the open, we had a whole lot of, um, buy delta, right? And then sellers tried to push it down and they couldn't break the lows, right? So we come back up, we make this 15-minute fair value gap, and we have yet to break the initial balance, right? Um, but this 15-minute fair value gap and all of these sellers, when we came back down into all of these sellers right at the open, they pushed price back up. Sellers came in here, tried to push down. The very next candle, right back up, right? So these sellers could not continue the push down. Buyers were just eating up their orders. Okay. So these volume bubbles are a big part of my trading. Um, the 9 SMA is a big part of my trading. It's probably the last part out of the three. And then fair value gaps are a major part of my trading as well. So when we see a 15-minute fair value gap made, bullish gap inside of um, sellers that have not been able to push price back down, I am very, very quick to take longs here. Okay, especially once we've retested all of these buyers down here and they've now started to push price back up again, and then they create the 15-minute fair value gap. And when we dip back into that gap, I'm going to have my stop a little bit below that gap. I would probably be looking right down in this area, okay, for a stop and take this long, even though we haven't broken out of the initial balance yet, because this is showing me a lot of strength. This is one of those times where I don't think price is going to come back down to the 25%. Okay. And this is just time in the markets. And of course, you head straight to the average extension level and even further, right? So there are times when my confluences, because the initial balance levels and the initial balance indicator gives me levels to trade at. Okay. What I want to see is and strength or weakness in the market. Okay. At these levels. So, once initial balance was made, we pulled all the way back to the 75. Okay. And again, the first hour was straight up, right? Um, well, not the first hour, but the first 15 minutes was straight up. Okay. That's displacement. Okay. So when I'm looking at displacement that gets above this range, okay, um, I'm looking for my dealing range golden pocket trade. Okay. So again, if I were to put this on, where's my keyboard? And the displacement is from the low to the high. So if I were to put this on here, you will see here's your golden pocket on these two lines right here. We come into the golden pocket. Yes, we spike through it, but wicks do the damage, bodies tell the story, right? No bodies closed below the 7-0. This one did briefly, but no bodies closed below the 75. Okay, so the 6-2, the 7-0, and the 7-5 are extremely important here. Price is holding the 7-5, which is where all these buyers were at the open. They're defending their positions. Okay, they are willing to keep buying. All right. So when we push up and we make this 15-minute fair value gap, this gap I expect to hold for higher price action. Okay. So, and this is what I wanted to say at the end before I show you the results here. Um, this is what I wanted to say at the end. You don't have to use fair value gaps. You don't have to use a 9 EMA. You don't have to use delta volume bubbles. Okay. However you trade, whether it be Bollinger Bands or uh, RSI or stochastics or you know EMA crosses, whatever you use to trade, take a look, go back through, go back and replay on TradingView, or just go back and look at the days and see where your levels of the strategy that you trade line up within the initial balance. Okay. And trade off those levels. Okay. The first hour of the day was bullish. Okay. That's what we had. We had a green candle. That's this big green box. The opening candle continuation indicator will tell you whether the first hour is green or red. So we had a bullish first hour. Okay. All right. So if we're looking for continuation, what needs to happen? Well, the first hour closes right over here, and we've retested these buyers. We're now moving higher. And after we close, we break above the 25, create the fair value gap, push back into it, and away we go. Okay. A lot of times you don't have to wait for the break. All right. You could have waited for the break. You got your retest right here, right into the 9 SMA or EMA. And then you got a color change where the next candle took out the body of this black candle, you could enter there. You could enter right on the retest with a small stop, maybe into the bottom of this, 2-minute fair value gap. Okay. Whatever you want to do. However, your indicators that you like to use line up with the initial balance levels. Okay. So you have you have to incorporate the initial balance into how you already trade your confluences. Okay. I like to have 3 to 4 confluences for me to trade. And when they all four line up, I go hard. Okay. And I make my money quick. If I only have a couple lining up, I go a little smaller. I don't take my full size 5 micro trade because not everything's lined up, but it's good enough for me to go ahead and pull the trigger. Okay. So I reduce my risk there. I'm still risking the same amount of points. I'm just on smaller contract size and I'm not risking the full $125 on the trade. If it starts working in my favor, I look for a place to add to the trade, not in drawdown. Add to your winners, not while you're in drawdown. Okay. Um, so that's what I wanted to say. You don't have to use the same confluences I do for this to work for you. All right. That's a big, big part. Now, if you like what I'm doing and you like the profits you're seeing out of me, um, you are more than welcome to come and watch me trade live. I trade live on Kick TV. Okay. Um, right, let me just pull it up so that you can see where it is. There is almost zero lag on Kick TV, which is why I like streaming there. I don't have any follow. I think I got one follower. Um, I don't have any followers to kick.com. Okay. So Kick streaming service. Um, and if I go to my channel, I've got 2 followers. Somebody else followed. Cool. Um, but I stream here. I don't stream to monetize anything. I stream so that I have a recording of my trading so that I can go back and review a day if I need to. And because I sit here and I talk into the mic with what I'm seeing in the market, what I'm thinking about the market. That way, when I go back and have to review a day, then I can, you know, hear what I was thinking and have a fresh set of eyes on a market that's already taken place. Okay. Um, so that's that's all I stream for. It's free. If you want to subscribe, that's great. Um, if you uh, want to if you want to follow the channel, that's great. You can follow it without subscribing, and I'm in there every day that I'm trading. So check in. See right over here where it says following. They're in black and white. When people are live, it turns to color. So you'll see if you follow me, you'll see me in that list. When I turn color, I'll be on. I'm on most days, Monday through Friday, around 9 o'clock in the morning. Okay. Um, you're welcome to come over and take a look at the way I actually trade and the confluences I use. If you're interested in starting to use the same system and confluences, then by all means, I will go into great detail with anyone who wants to know, um, and we'll go over it. Now, the delta volume bubbles, that is a proprietary indicator. There are free ones on TradingView, but they suck. Um, I just say it now. I've tried them all. I don't like any of them. This is from another Discord, and it is a paid indicator. It's $120 for a year. That's what they're starting at. It is extremely, extremely accurate, and it works very, very well. Um, I'm not a traditional volume guy. I don't look at volume, but I do look at delta volume. Okay, so and delta is just the difference between the bid and the ask, uh, how many times gets punched. And these aren't resting orders. For delta to be created, someone actually has to be actively hitting the order buttons to create delta. Okay, so um, that's pretty much it. Let's just pop up the results over the month of November, and you will see, I lost $215 on shorts. I lost $800 on longs. Um, my total net profit after losses was $3,735. Now, I did not have these delta volume bubbles in November, and I have been looking and looking and looking for an indicator that was good enough and gave me good information to trade with. Okay. And I just haven't found them. And the reason I like Delta is use, if you've ever used footprint charts, um, I got pretty well versed in using footprint charts, but I didn't use volume footprints. I used Delta footprints. Okay. And it's a really, really good area to see where a lot of buyers or sellers come into the market and if they get squeezed or if they are defending their positions. Um, and that it just makes a huge difference. And I've been profitable without them, but it helps a lot to have these on my chart. Um, and TradingView doesn't have footprint charts. I don't think, since they merged with, uh, well, yeah, never mind. They didn't merge. They don't have They don't have footprint. Volume footprint. Footprint delta. Footprint bubble volume. Yeah, there's a lot of stuff in here that says footprint, but um, there's some third parties that are paid indicators. Let's just take a look at. Let's just 7,000 people are using this one. Let's just take a look and see what it looks like. Right? Um, you know, I don't see a change on my charts. Um, see what the settings are. Uh, Point of control. Show bar delta. May have to be on a specific kind of bar. I don't know. Um, so footprint mode, up, down, volume, delta volume. Uh, okay. So some of these you have to get really, really in with. Let's see if we change volume candles. No. Um, if we go, hello, um, a line chart, still don't see any information. See, this is what I'm talking about. Yeah. So, I mean, I'm sure it works. He's got it up there. 7,000 people are using it. I have no clue. I can go into the thing and see it about this script. See, this is what uh, hide trading fuse default candles to view. Okay. Well, let's go in there and hide their candles. How do you? Oh, well, let's see. Let's go back to regular candles, and then let's go into settings. Style. No, that's an indicator. I don't want the indicator. I just want the chart settings. Symbol. Boom, boom, boom. Okay, they're hidden. Um, Still don't see any information. So I'll figure that out. But I like footprint candles. And the great thing is with this indicator, I don't need the footprint candle. I can still see regular candles, which I like to see. Okay. But I also like to have the footprint information in there when it comes to the delta because it's huge. It's one of look, every system works, every indicator works if you use it right. Um, but for me, delta volume has always been a key to really good trading for me, um, as you can see. So, um, you know, I just look for, you what does the first hour tell us, bearish or bullish? I look for 15-minute fair value gaps to be made. I look for us to touch into those fair value gaps, and look for a direction to catch my 100, 150 points uh, profits on YM. It's not hard to catch 150 points on YM. It moves like 600 to 700 points a day. Okay. So I hope that, you know, this helps. I know it doesn't. That's the problem. And let me continue on a little bit further. We're at 47 minutes. This is going to be about an hour. Um, Let me just go back through a few days and show you uh, where I'm taking these trades, where what I would be thinking in the markets. Okay, so I showed you this one, right? We made the high. It's a bullish day. We had lots of positive delta down here. We came back and retested those buyers. They held, retest again, went higher, broke the high, went up, fair value gap at a DRT level, okay, or initial balance level. So remember, this is our range, okay? And if I just call these 25% DRT levels, okay? Because if you use ICT DRT theory, that's all it is. You're taking the high and low of a range, you're breaking it into 25%, and it's a DRT level, okay? So it is the initial balance level that is the DRT level because we haven't broken outside of that range yet. So when you fair value gap at a DRT level, that is a very strong fair value gap. All right, including all the other information that we had of what price had done previous to making this. Okay. And then boom, you're on your 9 SMA all the way up to here. All right. So you take that trade, you get out anywhere you want to. Once you push deck down into this is the first candle that pushes into the fair value gap, and you can run that all the way up and be taken out when you close below the 9 SMA here for 168 points. Or you can hold through it, see if this level here holds, and it does, and you push up some more, 220 points for when you break this high right here. Okay. So this isn't, you know, the initial balance, and this is what I try to get people to understand is the initial balance is just a range. You have to know how to trade the range. And with the numbers we have, okay, you can use those, yes. But days like today, this day, November 26th, if you waited for the pullback to the 25%, you're not going to get it. But I would trade this before we break the range, expecting not to retrace back to it, right? Um, because of the context of the what had happened in the market previous to this level becoming important. Okay. So there are ways. I mean, you have a 2 minute fair value gap through the initial balance. Okay. Take the trade at the close of this candle here that creates the fair value gap and risk the bottom of this candle. Okay. That's a really good way to do it. Me getting in my way, I just get a better price. Okay. You could trade this and still get your 100 points easy. Fair value gap through the initial balance. I would not expect to have a pullback from that. Those two fair value gaps that are stacked right on top of each other with here and here, that shows a lot of strength going through the initial balance high. Okay. And we already know we've got strength because, again, these buyers defended their position and are now pushing price higher. Okay, so let's just run back another day um, and show you this one. Okay, this was a textbook edge full numbers game, right? So initial balance was made. The first hour was green. We push up and break initial balance. Yes, we fair value gap through it. Okay. And again, why would I not have taken this trade right here? All right. Because we have all these buyers, we have a green, and we have the fair value gap, but the fair value gap was made after this candle went up. Okay. This is the 1044 candle. So 1 minute into this candle at 1045, that's when this fair value gap was made. Now I want to see us pull back into that fair value gap. And what's inside that fair value gap? The 25% dealing range level of the initial balance. Break the initial balance high, pull back to the 25%, take your trade at the 25%. You've got a really small stop loss from the 25% level to the bottom of that fair value gap, a couple of ticks below it. That's 33 to 38 points, okay? Wherever you decide to place your stop. That's less than my $50 or my 50-point stop loss. So I'm saving some money there, even if I get stopped out, I'm not risking the entire 50 points. Okay. And this is a very strong trade for me to take. So I would be in 5 micros here. Okay. And you can see what happens from there. You just go up and up and up, 333 points, 36 points. I mean, you could be out at average excursion at 200 points. Okay. So you don't need this entire move. You get 200 points in the YM on five micros, you're golden. Okay. So that, that works for me. We had buyers up, sellers down. We swept liquidity down here at the bottom. You can see these lows here. We broke all these lows from this consolidation through London. Okay. And immediately reversed and went up 25% level. Now, um, back down, back up, break 25% and take it. Now, I don't really have good volume delta here information because we had buyers and sellers. I don't know exactly who's going to take control here, but I do know the edge full stats. And I don't have any volume bubbles on the way up to tell me buyers are still trying to take control of this. Okay. This is all on normal volume, not any high delta. Okay. So we push up, we come back, take my trade. I know I have a good probability here. I'm inside the fair value gap. and the fair value gap holds, and we take off higher. Okay, so let's head back to another day and see if we can find our trade there, right? Okay. All right. Here you go. Here's one that's a little bit funky, um, but I would definitely still take. Okay. Um, so initial balance was made um, on this candle right here. Okay. So what had happened when initial balance was made? All right. Well, we had a lot of sell off at the beginning of the market. And did we create a liquidity sweep? This is how you can tell where a liquidity sweep is. Okay. You had all these sellers here and all their stops are above this high. Okay. And if you look at the run up, they're protecting their position here. Okay. See all of that, all of that, all of that. All right. But from here, there's going to be some people that are long all the way up through here, all the way up to here. And then the sellers get slammed down. We sweep this low on big sell delta on this candle. Okay. This big candle. And then immediately you start seeing buying delta come in. Big buy delta. After all these stops get hit, because these stops have to buy, these are shorts, so they have to buy their positions back to get out of the market, and then big money starts piling in their longs. Okay. So you get big buy delta all the way up through here. We create the gap, we come into it, no candle closes below the midline of that gap, and then we push up, make initial balance high. We come back to the 25% before breaking the initial balance high, but knowing that this was a liquidity sweep, that the fair value gap held, we've gone up, we come back down. I'm taking this trade again at the 25% level before breaking the initial balance. Okay. And I get my trade all the way up to average excursion. And from the 25% up to there is more points than I need for my trade. It's 174 points. Ended up running 239 just in the initial push. Okay, I don't care what it does after that. This is the time frame I'm looking to trade from 10:30 to 11:30, 12 o'clock. Okay, I prefer to be done with my trading in that time frame. Okay, let's head back one more day, and I think we'll call it because we're almost at an hour now. Um, okay, so initial balance, we had a bunch of buy and then a ton of sell delta here that could not break this low once we got into this area. Let's take a look back. Well, big buyers, big buyers, big buyers. Prices come down here several times. Sellers have really tried to push it down. They tried really hard here. Buyers took it up. Tried really hard here. Buyers took it up. They didn't try so hard here. So somebody was giving up, and it was the sellers. Boom, up we go again. We break the highs of the consolidation, and at the open, they try again. Okay, and they fail again. All right. So what is this telling me for initial balance? Well, we made initial balance here. All right. We broke the highs here, and we came back to where? Oh, 75%. Okay. Now, this was a strong candle down through the 25. I'm not trading there. Even when we break back up, I still need, we did have some buy volume here and buy delta here, buy delta here, but then they couldn't continue the price. Okay. We immediately fell off. Well, we fell off here. We tried to push back up. Another big set of candles going through the 50%. And so when I see a candle this strong go through the 25, I'm not looking to trade at the 25. Okay. One, we haven't broken initial balance. Okay. But before we break initial balance, what happens? We come down to our golden pocket, 75%, the 6.2, the 7.0, and the 7.5. And we cannot close below the 7.5 or below this low here. We swipe it for liquidity, and sellers still can't push through this price. All right. So once we make initial balance and we come back down, that golden pocket is a perfect entry. Okay. At the 7.0, and you run it up. Now, that is only, I don't think that's a full 100 points. Sure, it is. Shit. I mean, that's 150 points just to get back to the 25. Okay. So I don't even need to get back to the 25 DRT level. But eventually we come down, we swipe the lows again, and still can't get past these lows. None of these sellers can continue pushing price down. And boom, one more time. Let's give it a shot. And then we just take off, right? Just nuts, right? But you don't need any of this. You've already made your money after initial balance was made, back down to the 7.0, and you're out of the trade somewhere in here for 100 points. Okay. So, you know, are buyers and sellers defending their positions? Well, you got this group of buyers right here. You know, if you put a box around, buyers here, buyers in this candle, buyers in this candle, if we just put a box around the candles that are showing the big delta, look at where we're at. We can't push below the midpoint of that range. This one just barely breaks through, but what happens after that? Woo! Away you go. All right. We are breaking above the range, but we can't break below it. Buyers are just keep buying this up every time it comes down. And our first hour was green. Take a trade. If you missed it there, you get it there. You back up above that, risk this low, get back above the 9 SMA, risk the low, away you go. Okay. This is the way I trade. Okay. It's not just I'm not just setting limit orders at initial balance levels. There's more to it than that. And it takes time. I mean, I'm no master trader. Okay. I've only been trading for 4 years, but I've gone through a lot of charts. I've used a lot of different systems. I've used a lot of different indicators. Okay. So here, what are we going to do here? Well, we make the initial balance right up here. We break through. We come back down to the 25. But what's happened here? Well, one, we've got sell delta right here. Okay, we had a big buy off the beginning of the market. Okay, and we had a big sell. We had some more sells that broke lows. Then we came up and swept the highs, broke the initial balance, immediately pushed down back below the 9. Well, I want to see if we're going to squeeze these sellers right here to go higher, we should not be able to get through them. Okay. So again, take the candles where this range is, all right, and draw a box around these candles because that's where all the volume is. Right there. Oh, right there to right there. Okay. A little bit higher. Okay. That's your sell orders right there. Okay. So if we're going to squeeze these sell orders and make them buy to get out of the market, we have to pop price higher. But look what happens when we get back into this sell zone. We just go right through it. Now we're on the 9 SMA in a downtrend. Okay. Where do you sell this at? Now, a lot of people are, and you hear people say it all the time, when we get all the way down here and you see this sell delta come in right here, okay, we're at right in this area here where all these sellers were. Now these sellers are jumping back into the market. They might have had to puke their positions up here somewhere, but now they're getting back in the market because this is the price they like. Okay, not heavy, but we're in that area. Now a lot of traders would say, "Well, shit, I missed the move. I can't I can't sell it down here near the lows because I mean, come on, price has already moved, 350 points on me. I can't, you know, I can't sell it down here. I missed the move." No, you didn't. The wonderful thing about volume delta. You see these sellers come in, we hit a level. You see buyers come in with delta, positive delta, pushing back, and it hits the 9 SMA. But these buyers cannot continue to push price up. We immediately get down, and as soon as you crack the body of this up candle right here with the positive delta, you enter that trade short. It had already moved 355 points. Was it done? Why were you scared to get in the market? Because it just went another 600 points. And this is during the New York session. That is a 1,000 point move day. Okay. When most people say, "Oh, I can't get in here," and they see it go down again, another 100 and something points, like, shit, I should have got in up here. Can't buy it down here. I've already moved 400 and some points. Sell delta, buy delta that can't push price higher, runs into the 9 SMA. And as soon as you cross this body's low, you're in the trade. And it moves another 476 points. Are you starting to see a trend here? Okay. Big sell delta. Buyers come in on buy delta. We hit the 9. As soon as you break this up candle's body, you're in the trade here. Price still moves another 240 points. Okay. This is why I love delta volume bubbles. I'll take footprint charts. They're a little bit harder to read. These bubbles make it super easy. Okay. So all kinds of reasons. The first reason is here. These sellers that were up here at the open are still in control. Okay. Sellers come in, buyers try to reverse it. They can't go further down. Sellers, big sellers start coming in even more. Buyers try to take it up. They can't. Big sellers come in. Now, usually when I see a move like this and I see this big, I'm expecting the green delta to start pushing price higher. But even here, buyers cannot take control. We've come down again. sell delta, buy delta, can't take it higher, come back down. Now you're getting to an area where sellers are getting exhausted after 1,000 point move, I would imagine, and they take it back up. We're at an hour and 10 minutes on this video, folks. Um, Look, if you like seeing this, I do it all the time. Okay, I do it all the time. Um, Again, here's a really good example. Okay, um, sellers right before the open, buyers they come in, they push price up, price starts falling. All these sellers start coming back in the market here at the lows. Buyers fail, sellers try to push it down. Consolidation. Boom, sellers try come in real heavy here to break it lower, right? And they can't. Buyers step in. Sellers and buyers step in. Price goes back up. Here we are again. What's the level that we need to trade at on a breakdown day? We have a 50-50 chance of coming back to the 50% level of the IB. Okay. Now I can't tell you if there were any fair value gaps here or not because price has gone back and through these areas. But all you have to do is look at the 50% level. Okay. If you're not sure because you got lots of buyers and sellers in the same area, you would think if we come back into this area, all these buyers that pushed the first hour up would continue and we might have a double break day, right? But just trust here is where I trust the numbers on Edgeful. I really can't tell through any of this whether buyers or sellers are in control with just the volume delta bubbles. But I know we've broken initial balance and we've come back up to the 50%. So I can take a short from there, risking my 50 points. Okay. And if I just do it the easy way, I take the trade at the 50% mark. I put on my YM. There's my 50-point stop. There's my 100-point target. Within 5 minutes, I am right back down to my 100-point target. If you missed that one because you just weren't sure, you come back up to it again. You could take it here, quickly make your 100 points or more. Using the 9 SMA, no candle closes above the 9 SMA until right here on the way down. And that close above the 9 SMA also has positive volume delta, but that's a 4-to-1 trade. You just made 200 points on YM. I hope this helps. Um, you know, I know it's a long video, but you guys asked for something very specific to see how I trade using the IB report and results or levels. Um, I'm showing you that I don't trade strictly off the IB levels. Okay. I know what the numbers say. I trust those numbers, but you also have to know context of the market. A lot of times I'm trading at IB levels, but I'm getting in before we break the initial balance because of the context of the market, my other confluences. Okay. When my other confluences aren't working, then I'm trading the numbers from Edgeful. I mean, even on this day, the pullback to the 25 here, I mean, it didn't quite get to the 25. So if you had a limit order set, you probably wouldn't have gotten there. you know. But if you did happen to say, okay, that's close enough, I'll take my short there. I mean, you still get 150 points. You have to sit and wait through some consolidation, but you get your 100 to 150 points off of the 25% level. But I know through Edgefull's numbers that the 50% is likely to get hit. And I would much rather trade short from up there because I have no clue who's in control using my delta volume bubbles. Okay. That's an hour and 15 minutes. I'm going to shut it off. But again, you can see I went through, I traded, and if I could just have November back, because I mean, this is $3,700 times 3 accounts. That's a $10,000 month. Okay. And I'm a little bit more conservative than that, but there's days I don't trade. There's days I'm not at my desk when it sets up. You know, there's days where I'm just, doing this in replay is a little easier than doing it in the live market. Okay. I'm, like I said, I'm not a master trader. I don't trade all these trades perfectly. And yes, I'm running in replay. I'm not, you know, going back. Um, you saw the very first trade I did uh, on November 3rd at the beginning of the video. That's how I did every one of these days. Okay. And I ended up with that kind of profit. I didn't end up with that good a profit in November. Again, I didn't have my Delta bubbles in November either, which makes a big difference in my trading. Trust me. Other than that, just using fair value gaps and the EMAs, I'm profitable. I can make money, but knowing where the delta is at, adding that to the SMAs and the fair value gaps and the initial balance levels, yeah, um, I can, I can, I can get that traded. I mean, I made $1,300 this morning before 9:37 in the morning. I took a gold short based on delta bubbles and levels um, before the market opened, and I was in a long at the market open in YM because of the golden pocket on the hourly chart. And I held that long through the open, and the open had two fantastic uh, spike up candles on the 2 minute chart. I hit my 250 target profit, and I know that off the open, that initial move could be a fake out or a liquidity sweep. And so once I hit my $250, I got out of the trade and I basically top ticked the market at the open before it reversed and came back down. But it was a valid trade based off the golden pocket. In fact, before I leave here, let's just get out of replay and I'll show you today's market. Okay. So, all right. So if we were looking at the hourly chart, okay, we had this spike down that swept liquidity and then this displacement up. Okay. So when I put my fib on that, my golden pocket fib on that up to the high, you can see where the golden pocket is, right? Um, okay. All right. So this is the candle. This is the 9 o'clock candle. So this is from 9 till 10 o'clock. Okay. So we came down and we hit the golden pocket before the open. Hold on. Let me get this pulled up. Oh, wait a minute. Let me sync that with the rest of the layout, and you'll see it on the 2-minute chart. Or I thought you would. Why did you not sync? Uh, why are you not? Okay, well, let's just do this. We'll delete that. We'll put another one on with the sync button on. Why are you not syncing, you little bastard? Oh, because it did sync. I'm just not on the right freaking day. Okay. So now you can see before the market open on the 2-minute chart, and not long before the market opened, we came down and we tagged the 6.2 DRT level, the golden pocket. So I went long right here. Okay. YML. I was only in 3 micros because I knew we were coming into the open. Okay. And we could definitely flush down to the 7.0 or even the 7.5 DRT. So instead of 50 points on a 5 micro trade, I had a bigger stop loss to play with because I was only in 3 micros, which allowed me to cover the 75 DRT level. And we immediately shot up. And as soon as the first 2-minute candle was done and this candle was moving, I added to the trade and I cut the trade off at the top of this fair value gap right here. Okay. Basically top ticking the market for 140 points. Okay. And actually, I don't know if I was in 3 or if I was in 2 contracts, but either way, I added to the trade when it was working in my favor. I was in profit. I added to the trade and then closed it out up here for my $250 in profit right before the market reversed and just went down for the day. Pretty sure that we just grind down all day long. No, we popped back up in there. Okay. So again, oh look, footprint charts. Holy shit. Look at that shit. All right. I'm gonna play with these and just take a look at them. Again, I like to have my regular candles in there. Um, so um, I want to see what these footprints actually look like, uh, and what it does, and play with them. Because again, now you can see, you know, delta actually inside of a candle. Okay, so I want to play with these and see what happens. Take a look at them. Um, maybe I have a footprint chart on one side and my regular chart on the other. But okay, that's a really long video, an hour and a half. If you made it to the end, yay you! You are very interested in becoming a profitable trader. If you have any questions, leave a comment down below. I'll gladly get back to you. Um, and again, I'm on Kick, streaming every day. If you want to stop by, watch my trades, um, then you know, stop on by, give me a hello in the chat just so I know that you're watching. Because typically, if nobody's watching, I may not be talking. I may be watching another stream, listening to music, doing whatever until I get a trade set up, and not voicing what I'm seeing in the markets. But if I know someone's watching, then I will give play-by-play commentary on the markets then, so you can understand my thought process as well, right? All right, that's it. I'm shutting it off. We'll see anyone who wants to stop by in the morning. Hopefully this was helpful. I will. I'll do something. Until next time, everybody, stay blessed.